Oh man, every time I hear that, I just sing along, but you don't want to hear me singing. How's everybody doing? Sorry we're a minute late here today. Happy Monday, everybody. Can you all hear and see me right now? I hope. Are we all good? Yes, George, let's go. I agree. Wonderful. Let's get the smash going. Let's get subscribers going. This is going to be a really slow week, guys. Just we have jobs report Thursday morning, which will be a big. But keep in mind, the markets close early on Thursday. That's right. They close early, 12 o'clock Central, 1 o'clock Eastern, and then obviously closed on Friday. So it'll be a very, very long weekend. And I really believe that this is going to be not, I don't want to say painful in a bad way, but it is going to be a super, super slow week. So that being said, doesn't mean we're not going to trade. Doesn't mean there's not opportunity. There definitely is, but just kind of wanted to set the stage. And what's really interesting is one of the members in OpVal this morning, Bill, had asked, okay, so what happens now that we're at market highs? And that is exactly what we are going to be talking about today. So kind of looks like a little Mountain Dew little sketch there, but yeah, we're at do we have to be worried, right? If people wanted to sell, or if you wanted to sell every time we hit a new market high, you wouldn't be doing real well. Hey Steve, how are you? So what do we have? Well, markets are back at all-time highs for the first time since February. Just absolutely unbelievable run that this market has had. There's optimism around the Fed cutting rates. Still, the next meeting is at the end of July. Still a very, very low probability that they're going to cut rates in July. But the September one is up near about 70% right now. So why has the market rallied? What's the enthusiasm out there? Well, fading fears of the tariffs, right? Even with the news Friday that came out about Canada, which could have been really, really negative for the marketplace, the market just kind of shrugged it off. Now, we do have July 9th coming around in a week. That's the big day for all of the deals or the tariffs to be in place. So maybe we'll see some volatility there, but there's certainly fading fears of the tariffs. There's a lot of hope for strong earnings. Okay. Earnings start again in earnest next week. So if we get a rest this week from the markets, the banks, everything, boom, we're right back at it next week. So those are some optimistic, some positive things. On the other side, valuations are really high. The S&P trading at 22 or 23 times earnings, that's historically very high. So there's that to worry about. Obviously, geopolitical risks, not like we, had a few weeks ago, but geopolitical risks are not done and gone, right? And then, like I had mentioned earlier, this Thursday, not Friday, because the markets are closed, but this Thursday, we get the June jobs report. All right, so those are both on the optimistic side and maybe a little bit on the pessimistic side, some things we have to think about. Now, let's talk about this, okay? Let's talk about historically, what have we seen happen when the markets hit new highs? And let's talk about how this recovery happened. And you talk about a V-shaped recovery. This is certainly a V-shaped recovery here, okay? If we look back to, inauguration, go back, 5-6 months, whatever it is at this point here, okay? First big noteworthy thing in the market, this is when NVIDIA started to fall out of bed at the time, because the DeepSeek AI out of China became front page news, okay? Then you got the inauguration, and then March 4th, okay? March 4th, you can see the top there, that is when the initial wave of tariff talk started. Okay. And we hit a temporary bottom. Okay. Got a little bit of a respite. And then April 2nd, Liberation Day, was the day that the markets really, really didn't like. And you can see the big drawdown. And we rallied back, but then we got to backtrack there. So maybe this is more like a W. I still think this is a V. Okay. And then for whatever reason, maybe valuations got too low, time to buy off the dip, who knows? But it has essentially been a straight line up from there. Okay, so this is a really good kind of diagram of what the market has been through in the last 6 months. Okay, now let's talk about in the past. How have things kind of, worked out after a new high has made? So new highs are normal, right? They're not a reason to panic. And how many times have any of you, myself included, kind of said, "Oh, we can't go any higher. We shouldn't be this high," right? There's XYZ that may happen here. I mean, how many times have we all said that, right? Well, when the market has hit a new record, it's absolutely common to hear some of that. It has to come back down eventually, right? And you know what? That's probably an emotional thought, an emotional understanding of the market, but not data related. So, if you're feeling uneasy, and I'm always one that plays from the very conservative side. So when we do hit milestones and new highs, I look at that as not that we can't go higher, but I always like to grab some protection, because typically when we get to those peaks, when we get to those new highs, volatility comes down like it is right now. Okay. So if you're feeling uneasy about, looking at the markets at all-time highs, you're not alone. That's natural, but it doesn't mean it's the wrong time to be invested at the market. Now, we're going to talk about not just trading, but some of the investment side as well. And I know we always talk that we have to keep that balance, right? One side of us trades, the other side, maybe you're looking at your 401ks and your IRAs and investing, and that's a different mindset. But check this out, everybody. I bet most people didn't really were aware of this, I should say. And I'm one of them that I really wasn't aware of this until I started looking into this here. So since 1950, okay, we're looking at 75 years of data here. Okay, the market has set 1,250 new all-time highs along the path to where we are right now. Okay, break that down. That's about 16 or 17 a year. Okay, here is the breakdown of what has happened. Okay, we can see the 90s, the big run up until the NASDAQ bubble, the dot-com bubble. The 2000s were pretty brutal, especially as we got towards the latter part with the great financial crisis. But then, boy, oh boy, the decade that just ended, gangbusters. And here we are, not even halfway through this decade, and already 104 times. Okay. A new high, David, is exactly what it means. A new high. We're at new highs in the market right now. We've never been this high. We're at new highs in the market. S&P is trading right now at 6170 or so, I think. The NASDAQ trading at 20,000, 400, 300. So these are new highs. Okay, so what do new market highs mean for investor really? Okay, they're not as meaningful as people think. It's not like there's this inflection point that says, okay, we're at this new high, this is going to happen, or because of this, we can expect this to happen. Okay, because why are we at new highs? Well, often, they kind of coincide with growth, the economy being okay, corporate profits being okay. But if you look at this new high, I would say the economy is okay. It's not gangbusters right now. In fact, if anything, I think, things are slowing down a little bit, though that's not reflected in the marketplace. Okay. And corporate profits are down. Corporate profit expectations for the upcoming earnings season have been slashed. Okay. But yet here we are. And these previous all-time highs have set the stage, honestly, for really, really good long-term results. Okay, check this out. Okay, I found this little nugget here, which I thought was really, really interesting. Okay, so what this is a comparison in the blue. Okay, in the blue, if you would have invested at one of those 1,250 all-time highs that we've hit since 1950. So literally the day we hit an all-time high, if you had put money in the market. The yellow is just investing over time, any other time. Okay? So what's really interesting here is they're really close. They're really, really close. And don't forget, what we're looking at here includes the crash of 87, the dot-com bubble, and of course, the great financial crisis of 08. Okay, so again, when we're at all-time highs, it does make people feel uneasy. I bet if you asked friends, family, acquaintances, whatever, if you ask them, do you feel more optimistic or pessimistic or maybe cautionary about the market right now, I bet the majority of the answers would be pessimistic or cautionary. And again, I think that's human nature. How about all of you? Let me ask you. How do you guys all feel about the market right now? Are you optimistic that it's going to keep going, or truly do you feel kind of cautionary? I won't say pessimistic. We'll call it cautionary. Optimistic. I love it, Jake. And also, how many times, and this is human nature, how many times have we hit, a new high and we say, you know what, I'm going to wait till the sell-off happens to redeploy new money into the markets. And then that correction or, that reversal comes and, oh, no, things are too dangerous now. I can't get into the market right now. Right? How many times has that happened? That's probably happened to all of us. All of us. Okay. So now, optimistically cautionary. I love that. Optimistically cautionary. Cautionary, optimistic. Yes. That is great. So again, what this is showing here is basically regardless of when you invest in the market, timing wise, it is pretty much the same. Okay. Then, deeper dive I was taking, and I found this little piece of nugget. Okay. How often does a big correction happen following a market high? Okay, this is just pure data. This is not emotion. This is not my bias at all. This is just pure data. Okay, so the pullback that we're talking about, or the correction we're talking about, is 10% or greater. Okay, after hitting an all-time high. So within 1 year, only 9% of the time did the market correct or go down 10%. 1 year after hitting a market high. 3 years out, only 2%. 5 years out, zippo. Hasn't happened. So again, you got to have your either your investor or your trader hat on, right? This is more for the investor hat, not for the trader hat. Okay. So what this really shows is if you're putting money away in your 401ks, your IRAs, your Roths, whatever it is, there's never a bad time to put money away. I don't know if this is surprising to any of you. It was definitely very, very surprising to me. And listen, if you're in the game for the long term, as we were all kind of taught to be, right? Don't look at your accounts on a daily basis. Don't look at them on a monthly basis. You're in this for the long haul, right? Well, if you're really in this for the long haul, there's a pretty darn good track record. Staying invested, not trying to market time is really successful. It's really successful. We all try and market time, right? We all say, oh, this is the low, this is the high. Boy, you don't want to do that. You don't want to do that because, okay, trying to time the market is nearly impossible. You have to be right twice, right? Once when you're getting out and once when you're getting back in. Okay. And market recoveries, as we have seen with this latest market recovery right in front of our eyes, they happen quickly and they can be very, very unpredictable. And if you miss out on just a couple days of the recovery, boy, your returns are going to just fall off a cliff. So market timing is so, so difficult. And then again, I mean, emotions absolutely play a big factor in trading and investing, but there's something called the fear and greed index. Well, fear and greed can definitely make us do things we don't want to do, or can definitely make us make some decisions that we really, really, really don't want to do. Am I therefore in favor of privatizing? Is that Social Security, Connie? Is that what you're asking? Let me wait and see your response here. What I'm a little unclear as to how that has to do with what we're talking about with market corrections or investing at all-time highs. Are you saying because if Social Security was privatized, the money would just be in there and it would be invested and it would never go anywhere? Or I'm not really sure what that correlation is. They could have better returns. Absolutely. They definitely could have better returns. But if you privatize it, I guess, and this is a whole nother conversation that we could, probably take another time. But if you privatize it, what's guaranteeing what's behind it? I know you can look at Social Security right now and say, "Oh, there's no guarantee. They're taking it away from us now, or they're whittling it down, whatever it might be." Well, at least right now, it is guaranteed by quote unquote the full faith and obligation of the United States Treasury. But it is a political question and not one that we are going to discuss here. All right, let's get this up on the board here. Okay, we'll go with ATH, Thor says, for all-time high. Okay, all-time high, ATH, that is our word of the day. Let's get them in there. I see them flowing through. While those names are coming in, I'm just scanning what's going on here. I see Boeing is getting hit real nicely. I am glad we got in that. In fact, we might look to start taking some profits there in Boeing as soon as we're finished market minds here. I'm going to look into that, either taking some profits or even perhaps turning it into a 132 or a roll here or something. We are definitely going to take a look at that. All right, so let's get back to this one right here. Okay. This is unbelievable because even if you think about those times of big market corrections, and again, how many of you were actually, and I guess this is a question maybe some of your age or not, how many of you were actively either trading or investing where you just, already had a 401k set up or whatever during the 87 crash? How many of you? Okay, in fact, I was a senior in college. And remember sitting on my couch with a couple of my roommates watching on TV. And I don't even know what channel we were watching at the time because in 87, I'm not sure which, if it was CNBC back then or whatever, but I remember watching the market updates on TV. Yep, exactly, Justin. I was a senior in college. So this data that's here includes all of the corrections / debacles that all of us have really lived through. And I'll start it with the 87. Maybe some of us didn't. But then you had, even before the NASDAQ .com bubble, you had long-term capital. So you had a big drawback in the middle 90s. Then you had the .com bubble. Then you had the great financial crisis 7 and 8. Then we had the beginning of COVID, and then we had what just happened 2 months ago. Okay, but again, if you just look at this data, and it is absolutely human nature and emotional not to be concerned, not to want to look at your accounts every day, but here it is right here. If you have the wherewithal, I don't want to say guts because it's not really a challenge so much, but if you stick to investing, putting some money to work when there are corrections or when there are market tops, historically, you're going to be just fine. You're going to be just fine. So this was really, really some of this surprising news to me regarding what happens at all-time highs and market tops. Ted Nugent's cousin. Who's Ted Nugent's cousin? You are, Jake? Did I miss something here? All right, everybody. Last call here on the wheel. ATH all-time highs. And while you're doing that, any suggestions for what you would like over the next 2 days? Because there will not be market minds Thursday or Friday. Again, Thursday, the markets close at noon Central Time, 1 o'clock Eastern. Friday, got it. Got it, Aladdin. Friday, the markets are closed. So market minds will only be tomorrow and Wednesday. Any suggestions for what you would like me to cover? Market insights. Okay, Julia. You know what? I give you my market insight in about 20 seconds right now. Cautiously optimistic. Again, does it mean you go out and short everything right now? No. What it means to me is, as a trader, more so than an investor, because I let my financial planner do what he needs to do. But No reason not to have some protection in the market when volatility is cheap. Buy when you can, not when you have to. Always want to have bullets in your back pocket. We could certainly talk about the budget bill, George, but I hesitate for that a little bit because I really don't want to press the political hot button. And that one could definitely kind of rev some things up there. Spreads. Do I have a financial planner? You bet, John. I learned long ago that when I tried to mix my trading with my long-term financial planning, boy, did I mess things up. Boy, did I mess things up. Hedging long positions for protection. All caps are always fine. Scans to find a possible signal. That, you know what, we're definitely going to do that one. I've got a couple great scans that I use on Thinkorswim. I'm writing that down right now. That is great. Options versus stock versus day trading. Bill, were you talking about like the benefits or the drawbacks of using options versus trading stock? Okay. All right, everybody. Hopefully this was a little bit of an eye-opener for everybody today. I thought it was very apropos to discuss this. I know a lot of this data today really surprised me. Commodities futures options. You know what we're going to do on that one, David? I'm actually going to bring in Dan O'Brien, our futures trader. Commodity futures options. I'm going to bring in Dan O'Brien to do that one. That would be great. All right, guys, let's get to the wheel. The first wheel, studies and trackers. Good. Could do that. Wow, Monday wheel. We got a good amount of people in here today. And it's a reset. So if you won last week, you are eligible today. All right, here we go, guys. Frank, Gary, Gene, George. Who's it going to be? George. Thank you, Aladdin, for the reminder. Appreciate that. George, are you in the house? I know you were here just a few minutes ago. Gene, you were close. George, there it is. Yes, sir. He is here. George, send me an email. We'll post it up here in the room. prosperswag@prospertrading.com. Send me an email. There it is with your swag size and your address. All right. Thank you, everybody. Don't forget again, PSA, public service announcement. Markets close early Thursday. Markets are closed completely Friday. Short trading week. Short trading week. All right, everybody. Thank you as always. Appreciate you all being here, and we'll see you tomorrow.